Hello, and welcome back to the channel. I'm Algabot, and here we break down automated trading strategies for MetaTrader 5 in plain, practical language. In today's video, we're studying an expert advisor called Rsi Trend Pullback. It's a trend continuation approach built from two simple ideas: market structure read directly from swing highs and swing lows, and momentum measured by the Relative Strength Index, or RSI. By the end of this video, you'll understand how it defines a trend, how it waits patiently for a pullback, and how it frames its stop and target with the ATR. This is educational information only, not financial advice. Let's get started. So what does this expert advisor actually do? At a high level, Rsi Trend Pullback is a trend continuation strategy. That means it doesn't try to predict tops and bottoms, and it doesn't try to fade big moves. Instead, it looks for a market that is already trending, and then it tries to join that trend after a temporary pause. It reads the trend in a very direct way, straight from price structure. The strategy tracks confirms swing highs and swing lows. When it sees a series of higher swing lows, it treats that as an uptrend. When it sees a series of lower swing highs, it treats that as a downtrend. Notice that there are no moving averages anywhere in this logic. The trend definition comes purely from the shape of the chart itself. Once a trend is established, the second building block comes into play, and that's the Relative Strength Index. Rather than using RSI in the classic overbought and oversold way, this strategy uses it to measure a pullback in momentum. In an uptrend, it waits for RSI to dip below a lower band, and then it watches for momentum to swing back up through that band. In a downtrend, it does the mirror image with an upper band. The thinking is that trends tend to pull back, pause, and then continue, and entering as momentum resumes aims to avoid entering during the decline itself. Risk framing comes from the average true range, or ATR, which measures recent volatility. The strategy uses ATR to place a stop loss and a wider take profit, so the intended reward is larger than the intended risk on each idea. Who is this style suited for? Educationally speaking, it's a good study piece for traders who like trend following and want to understand how structure and momentum can be combined in code. It's symbol and timeframe agnostic, but it was designed with liquid foreign exchange pairs such as euro to US dollar or pound sterling to US dollar on the 15-minute to 1-hour charts in mind. And as always, remember that trading involves risk, and losses are a normal part of any strategy. Let's walk through the exact logic step by step. The first job on every completed bar is to update the swing structure. The strategy looks back over a window set by the swing lookback parameter, which defaults to 4 bars on each side, and it checks whether the bar in the middle is a local high or a local low. By storing the last 2 swing highs and the last 2 swing lows, it can compare them. If the most recent swing low sits above the previous swing low, that's a higher low, and the strategy reads an uptrend. If the most recent swing high sits below the previous swing high, that's a lower high, and it reads a downtrend. With a trend in place, the strategy turns to RSI for timing. It calculates 2 readings: the RSI value on the bar that just closed and the RSI value 1 bar earlier. It also defines 2 bands from the PullbackLevel parameter. With the default of 45, the lower band sits at 45 and the upper band sits symmetrically at 55 on either side of the 50 midline. Now for the entries. For a long, 3 things must line up. The market must be in an uptrend from the swing structure. RSI must have dipped below the lower band on the earlier reading, and then climbed back to or above that band on the latest reading, showing momentum resuming upward. And the bar that just closed must be a bullish candle, closing above its open. When all 3 agree, the strategy signals a buy. The short side is the exact mirror. The market must be in a downtrend. RSI must have popped above the upper band, and then rolled back down to or below it, showing momentum fading. And the closing candle must be bearish. When those align, the strategy signals a sell. Risk control uses ATR. On a long, the stop loss is placed 1.5 times the ATR below the entry, and the take profit is 2.5 times the ATR above it. On a short, those distances flip around the entry. That gives a reward to risk frame of roughly 2.5 to 1.5 before costs. Finally, the strategy holds only 1 position at a time for its magic number, so it won't stack trades. Each position is then left to reach either its stop or its target. Everything you've just heard is fully mechanical, with no discretion once it's running. Let's read the MQL5 you see on screen as if we were in Meta Editor. At the top are the input parameters. RSI period is 14, the pullback level is 45, and the swing lookback is 4 bars on each side. The ATR period is 14, with a stop multiplier of 1.5 and a take profit multiplier of 2.5, and the default lot size is set to 0.10. Just below, the code derives the lower band straight from the pullback level and the upper band as 100 minus that level, giving 45 and 55, and it flags whether the closed candle was bullish or bearish. Now look at the long block. The Boolean called long signal is true only when uptrend is true. The previous RSI was below the lower band. The current RSI is at or above it, and the candle is bullish. When that's the case, the code reads the ask price, sets the stop 1.5 ATR below it and the target 2.5 ATR above it, and calls trade.buy with those levels. The short block, just underneath, is the mirror. The short signal is true when downtrend holds. The previous RSI was above the upper band. The current RSI is at or below it, and the candle is bearish. Then it reads the bid price, sets the stop 1.5 ATR above and the target 2.5 ATR below, and calls trade.sell. So both sides share the same structure, simply flipped in direction. This is for educational purposes only. Let's bring this to life on the chart and walk through a long trade and then a short trade, candle by candle. Keep your eye on the RSI panel underneath the price. You can see 3 lines there. The lower pullback band at 45, the midline at 50, and the upper pullback band at 55. Look at the opening candles on the left. Price drifts lower and prints a clear swing low, while RSI dips down near 30. From there, the market turns and pushes higher. As price climbs, RSI rises back through the midline and up towards 60, telling us momentum has shifted to the upside. So far, this is just context. The strategy is quietly tracking structure. Now watch the middle of the move. Price pauses and pulls back, but importantly, it forms a higher low. That second low sits above the first one. With a higher low confirmed, the strategy now reads an uptrend. And notice what RSI does during that pullback. It slides down and dips just below the lower band at 45. That's the momentum pullback the strategy has been waiting for. It does not buy the dip itself. Then comes the key candle. A bullish candle closes, price turns back up, and RSI snaps back up through the 45 band. All 3 conditions are now satisfied. Uptrend, RSI crossing back above the lower band, and a bullish candle. That's where you see the buy entry marker appear. The stop loss is tucked roughly 1.5 ATR below the entry, just under the recent swing low, while the take profit sits about 2.5 ATR higher. From there, price continues the trend, candle after candle, until it reaches the take profit target. That's our long sequence complete, capturing the continuation after the pause. Now the picture changes. After the rally, price prints a high and then starts to roll over. Watch the highs carefully. The next bounce makes a lower high, peaking below the prior high. With a lower high confirmed, the strategy now reads a downtrend. During that bounce, RSI pushes up and pops above the upper band at 55, showing a countertrend rally in momentum. Then momentum fades. A bearish candle closes, price turns back down, and RSI rolls back down through the 55 band. Downtrend, RSI crossing back below the upper band, and a bearish candle. That's the sell entry marker. This time the stop sits about 1.5 ATR above the entry, just over the lower high, and the take profit sits roughly 2.5 ATR below. Price then works its way lower, printing a fresh low, until it reaches the take profit target. And there's our short sequence. Seen side by side, the symmetry is clear. In both cases, the strategy first confirms the trend from structure, then waits for RSI to pull back into the opposite band, and only acts when momentum swings back in the trend's direction with a confirming candle. Of course, not every signal reaches its target in real markets. Pullbacks can deepen into reversals, and losses occur. This walkthrough is an illustration for educational purposes only. So that's RSI Trend Pullback from top to bottom. We covered how it reads the trend from swing highs and swing lows with no moving averages, how it uses RSI pullback bands to time entries as momentum resumes, how a confirming candle adds a final filter, and how ATR frames both the stop loss and the wider take profit. We also read the core MQL5 code and watch both a long and a short example play out on the chart. Remember, everything in this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like me to study next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.